Welcome. In this video, Onyxcoin has started an uptrend. We will analyze it. Don't forget to subscribe and like, and please watch to the end to understand. The prominently formed upward curve structure on the chart currently stands out as a highly positive technical pattern in today's market activity. These types of rising curves offer important clues about the direction of the trend, especially in the medium to long term, and reveal the overall momentum of price movements. When examining the current price action, it is clearly seen that this curve is being respected, and each time the price touches it, it gains upward momentum. This indicates that market participants consider this curve an important support line and respond with strong buying activity at that level. Rising curves function somewhat differently than classic support lines because they progress in a curved, not linear fashion. These curves generally show that the market is gradually gaining strength, that buyers are stepping in at increasingly higher levels, and that the price is steadily climbing like a staircase. The presence of this curve in the current scenario proves that a strong structure dominates the market, and that the price consistently leans on this curve to maintain its upward trend. One of the most striking aspects of this pattern is the upward bounce that occurs with each price touch. This is considered a highly valuable signal in technical analysis. The more frequently a support line is tested and the price rebounds from it each time, the stronger that support becomes. The fact that the current curve behaves in the same way creates a positive expectation that the trend will continue as long as this structure remains intact. Each touch shows that buyers find that level critical and intervene strongly. At the moment, the price is moving very close to this curve, which holds great importance for investors. Because if the price takes support from this curve once again and continues its upward movement, it will further strengthen the trend. A possible bounce at this point could signal not only a short-term recovery, but also the beginning of a new upward trend that could extend into longer time frames. This makes it a highly valuable signal for investors considering entering a position. Especially these types of rising curves indicate that the trend structure is built on solid foundations and that the market is growing in a healthy manner. In other words, instead of sudden speculative increases, we are seeing gradual and steady buying activity. This suggests strong investor confidence, and that market participants are seeing each pullback as a buying opportunity. Therefore, each price touch on this curve should be reevaluated as a potential opportunity area for investors. Maintaining this curve is important not only for increasing the value of existing positions, but also for keeping the overall psychological mood of the market positive. Because technical structures reflect not only price movements, but also investor sentiment. If this curve is not broken and the price manages to stay above it, a positive atmosphere will likely continue in the market. This encourages new buyers to enter and existing investors to regain confidence. At this point, continuing to monitor the curve will be a highly strategic approach from a technical analysis perspective. If the price bounces upward from the curve again, it may not just be a local reaction, but could also signal a rally that extends into higher time frames. These types of patterns often set the stage for the price to test or even break significant resistance levels. Therefore, support taken from the curve could lay the groundwork for a major price move in the coming days. Moreover, this respect for the curve aligns with the structure of past price reactions. It has been observed that after previous touches on the curve, the price rose strongly, easily broke key resistance levels, and provided investors with high return opportunities. The repetition of such historical patterns is quite likely, but we can't base our analysis solely on the curve. Let's take a look at other metrics as well. Stay tuned. A highly positive and promising technical pattern is currently observed on the chart, the cup and handle formation. This pattern is widely followed by investors in technical analysis and is considered a structure that signals strong upward potential. When analyzing the current price movements, it is clearly seen that the handle portion was previously completed and that the price is now steadily forming the cup portion. This indicates that buyers are regaining strength in the market and that prices are preparing for an upward breakout, a very positive sign. The cup and handle formation typically signals a long-term recovery starting from low levels. In this pattern, the price first forms a bottom through a sharp decline, gradually recovers back to the previous level, and finally creates the handle through a short-term correction. It is often interpreted as a precursor to bull markets. One of the most notable aspects of this formation is that its target level is as high as the depth of the cup. From the current levels, this clearly shows that the price holds significant upward potential. At present, the price continues to form the cup with great precision. This is an extremely positive development for investors, as it shows that long-term confidence in the market is being restored and that investors are increasingly convinced of upward pricing. The previously formed handle further supports this belief. The handle is usually a short-term horizontal or slightly downward correction and represents a consolidation zone where weak hands are eliminated and strong investors increase their positions. The fact that the handle portion has already been completed indicates that the current upward movement is based on a much stronger foundation. The formation of this technical structure represents not only a positive technical development, but also a highly constructive psychological process. As investors witness the price successfully completing its recovery after a decline, the negative sentiment in the market dissipates, and optimism begins to grow. This naturally leads to an increase in volume and trading activity. Especially when the cup portion breaks upward, investors recognize the completion of the pattern and may become more aggressive on the buying side. This sets the stage for prices to quickly reach their target levels. Target projections based on the depth of the cup are among the most fundamental and reliable approaches in technical analysis. According to this method, the distance from the bottom to the top of the cup is added upward after the breakout to determine the potential target level. In the current case, the cup appears to be forming in a well-balanced and symmetrical manner. This suggests that the target is technically very reasonable and achievable. Additionally, when reviewing historical examples of such structures, it is often observed that prices exceed the target level. Therefore, this pattern offers an attractive opportunity not only for short-term, but also for medium and long-term investors. This strong formation in the current outlook could be a sign of the major rally that investors have been patiently waiting for. Especially when closely analyzing support and resistance levels, it becomes evident that the price has built a strong base and that the upward move may progress with fewer obstacles. Supported by volume, this formation is a clear sign that the bulls have taken the stage and that momentum has shifted upward in the market. The determination shown by market participants at this point will allow the formation to complete successfully and drive a swift move toward the target level. In conclusion, the current price action paints a highly positive and promising picture. The cup and handle formation is a very strong structure both technically and psychologically, and it is now visibly forming on the chart. Looking carefully at the recent developments on the chart, it is clear that the price has started to make a strong move above the 200-day exponential moving average. This is considered an extremely important indicator for determining the long-term direction in technical analysis. In particular, an upward breakout of strong and long-term trend indicators such as the 200 EMA gives traders important signals. The fact that the price is currently approaching and pushing towards this level suggests that the market is signaling an upward reversal and may signal the beginning of a long-term uptrend. The 200 EMA is an important tool that many professional traders and algorithmic systems consider to determine the trend direction. When the price is below this average, it is usually bearish, but when the price breaks above this level, the market perception starts to change dramatically. This transition marks a phase in the market where the bears start to lose their influence and the bulls gradually take control. A break above the 200 EMA not only provides short-term buying opportunities, but also signals that long-term investors are regaining confidence in the market. This could lead to volume increases and price momentum. The 200 EMA shows us long-term trends. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.